Good day, everybody. Brian here from quantlabs.net. We're going to talk about trading baskets, the high-performing ones I've been posting over the last couple of months. Let's get into the details of this. So, as I said, everything's pretty well distorted in the economy, okay? It seems to be all breaking down. All the norms that we're used to in terms of the economy, everything's breaking down. I'm going to show you why. Now, a lot of it is thanks to this thing called MMT, Modern Money Theory. Just look it up and research your own to see what I mean. Now, this next downturn that we're going to go into is not your grandpa's downturn, and I'm going to further explain in a minute about that. Here's a problem with MMT. When stocks go up, bonds are supposed to go. Sorry, when stocks go down, like the Russell today, negative 4.7, those bonds are supposed to go up, and yet here we are, negative 3.5. Fed has increased their interest rates yesterday at 75 basis points, the highest since 1994, because of inflation, and everything seems to be breaking down because of it. All because, well, they decided last year to pump about 35%, 45%, I'm not sure the factor. In 1 year, they put that amount of money into the money supply, all printed by the Federal Reserve. So here we are with high inflation, okay? Now, one thing you got to know is bonds are not going to save you, as I just showed you. The high national debt, nobody wants to hold it. The other thing is gold is usually not going to give you the performance you want. You can see here since March 2020, July 2020, over the last close to 2 years, gold has not performed. It's been in range bound. So don't expect that to suddenly go up unless there's a calamity. And even if there's a calamity back in February with the Russian invasion, it's pretty well moved, but it came back down and went back in a range bound mode. Okay, don't expect that. Now the other one is oil. With the inflation, I think it's peaked. It will probably come back down, but I don't know. We're probably too late in that trade there to get any kind of return. Now the other big one that's a big factor is Bitcoin. It's pretty well wrecked, as the young folks would say. Will it come back? I'm not sure. It's regulated to death here. One of my favorite ways to get around in crypto was private cryptocurrencies. As you know, I've always talked about Monero, Zcash. Well, they want to get rid of it because they don't want you to have anonymous transactions online on a blockchain. Governments don't want you to have that. It's all about control and controlling your potential to have independent wealth. Here, that's the problem. Okay, so as I said, we're also in a high inflation environment. I'm sure you've seen this before, where you get a 2% raise, but yay, you're still fighting against 6.5 or in the latest case 10% inflation. It's pretty well, you're moving backwards. Now the other thing that which makes it not your typical grandpa's downturn, recession, or even depression, it's basically AI and machines are coming after your jobs. We've heard about a lot of massive job layoffs, 20% at a time, right across in companies, corporations. That's pretty well the first time that started happening was back in 2008, but yet here we are, and it's like no big deal, normal news. So is your job safe? The other thing that makes it even worse is the bots, the machines coming to replace you in your job, replace you, control you. Who knows what the future is? I'm sure you've heard about it many times over. The other thing is about your retirement. Will it be a golden age? Even if you're on a pension, a fixed pension from a government, golden age, they may get cut back. Why? Because of national debt. Many governments are going to find ways to cut back. Pensions is going to be one of them. So here we talk about the new phase of the unretired, going back into the workforce because they know they can't afford to retire. Okay, so we've talked enough about problems and reality. Let's talk about the solutions. So ask any high-performing, decent portfolio manager, financial advisor. Usually you want high annual returns with low volatility. Here's an example here. Fairly low, but it's high-performing, very predictable since the beginning of the year. 200+% annual return. This is the key factor here, is the Sharpe ratio, 2.47. Anything over 2 is considered really good, where Goldman Sachs wants to hire you. So basically, all the trading baskets I've generated have always performed at least two. I just had one a few days ago that generated a 3.6, which is pretty exceptional. Now here's the more details on it. 2.4, 238. Now again, this is one of those conservative trading baskets. And here's the other thing to highlight here. You have in blue, that's the trading basket, the strategy. And here in yellow is the standard benchmark of S&P. You can see it's kind of going negative and going nowhere, and that's since last year. Now the other thing you want to highlight is monthly returns. You can see all green, really strong. 43% last September, January 60%. These are just monthly returns. 46%, 35%, and 31%. You will occasionally get a negative monthly return, but all this year, I don't see it a whole lot. Here's another one. Again, all positive, 25% return, 18% monthly return, and 23% return. You know, net, these are really strong performance. Now, here's the other thing. This has been approved by a CFA from one of the big 5 Canadian banks. Runs a 9-digit portfolio. Is actually in the top 5 best performing portfolio managers in the bank. They run a internal in-house family office. And here's his words. Thanks for sharing. Very impressive indeed. Is this a currency and commodity account that you self-manage? Returns are certainly impressive, despite some intra-period volatility, as I know a one-day return in the period of negative 34%. Despite that, you certainly generated some exceptional numbers. And also for validation, looks like some currency trades and few commodity and related index exposure. The returns do look accurate based on the below trades. So that's his words. He approves it. That's a workflow. Here's the problem with a lot of these financial advisors, though. They're handcuffed. They're mandated only to manage stocks and bonds. And you just seen the chart I just showed you from Yahoo. You have a day of negative bonds and at the same time, the same day, negative stocks. So that's broken. That's why it's distorted. And good luck with it. Now, all the stuff that I'm showing you in these trading baskets are mainstream ETFs of currencies. These are not exotics. These are not weird things. These are actual ETFs that you can get through mainstream brokers. And same with currencies as well. So basically what we do is we follow hot capital flow around the world from everywhere that you've not heard about or thought about, and you will not get it in the mainstream news. So here's the major benefits of all this. You can save time. I'll get into that in a more. The big one is there's no intraday trading whatsoever. Okay, there's no programming, nothing. It's just looking at these instruments, you like them, get into it. These are also optimally timed, okay? Plus, when it comes to allocation of these things, they're automatically done for you, so you don't have to equally weight them, and if you did, you'll still get much higher performance because they're optimally allocated. That's in terms of the weighting. Now, the other thing is, I don't want to manage your money, okay? I don't want to get into that just because of regulatory concerns and all that. This is all within your own broker, okay? So you have total control over that. Now, as I said, there's minimal time required. We hear about the excuses. I don't have the time because of a job, or I don't have the focus, and da-da-da-da-da. That's an excuse, okay? You're looking at maybe 5 to 8, maybe 10 if you have a good day, to look at those trading baskets, and then ask yourself if you want to invest with that in mind. It's up to you. Okay, so you have total control over that, and it takes minimal time from doing that, other than setting up those trades and positions based upon how you want to allocate within your portfolio. Now, the question is, do you want daily trading baskets? I can generate these things all day, all night, 7 days a week, and they do great results. So the question is, join our private community, okay? So here's where you go. I'm going to put this in the description of where you got to go. Right here. So quantlabs.net/academy by Quant Analytics. Okay, so like I said, I'll put that in the link. But here's the thing. $47 a month. This thing's going to go up to $67 or $97. And this thing, over time, will go up to $120, $150 per month. Okay, so you'll be able to join the community on our private chat server, Telegram, and all that. And this is, again, all anonymous and privately. So you're not getting tracked by, let's say, Google, stupid Facebook, and and even the government as well. Okay, so jump on it while you can at that rate. Even if you're poor like a mouse, I'm sure you can spend $47, and you may even get be able to have it pay for itself in the first month with the kind of monthly returns I'm showing you. If you're not interested in that, keep on tabs of what I'm doing at quantlabs.net/banking. Fill in your info here. I don't release it. I'll probably change this and redo the presentation as I update it. But for now, this is what we're doing, and hopefully we'll see you on the other side, as I say.